Welcome back. Now, Spear Reit is expanding its portfolio. That's as the group agreed to acquire 13 properties from Emira Property Fund for about 1.1 billion rand. And joining me now as we take a look at the merits of this deal is Spear Reit CEO Quintin Rossi. Thank you so much for your time, Quintin. Now, let's actually start off with what this acquisition means for the magnitude of your portfolio of assets and positioning as a REIT in the Western Cape.
Thanks, Renati. Good evening to you and your listeners. And yeah, I think it's a fantastic opportunity that Spear is embarking on in terms of this acquisition. This acquisition has all the makings of a very complementary portfolio acquisition for Spear. We will increase our portfolio ownership from around 28 properties to around 41 properties post the implementation of this transaction. In addition to assets under ownership, will increase to about 5.4 billion post implementation. We're currently at around between 4.5 and 4.6 billion across the asset types which we invest into, which are commercial offices, industrial complexes, and convenience retail centres.
Yeah, and actually, let's talk about the weighting of these additional assets. Is it just an equal weighting in terms of industrial, retail, office focus, or is this a specific area that it's leaning towards? And also, does it speak to the strategy of focus that Spear has been embarking on?
Yeah, I think as I mentioned, it's very complementary. There's a lot of synergies, both in locality and asset type. I like to look at it, what will the Spear portfolio look like post the implementation of this transaction? We're probably going to be looking at about 59% of our portfolio being industrial, which has always been a strong cornerstone of our Western Cape portfolio. And approximately 27% will be in the commercial office part of the portfolio, which is single tenant and multi-tenant across well-established nodes, and approximately 14% of retail. And that's predominantly convenience retail with some destination retail. So we think it's a great mix because currently it's almost a similar weighting as to the current Spear core portfolio.
All right. You talk about operating efficiencies that this will create. What exactly do those entail?
So Spear is a fully internally managed REIT. So we conduct all of the functions of our business internally: asset management, property management, leasing management, rent collection. Currently, that's not the case with the acquisition portfolio. Those are currently externally managed properties. Okay. We believe that our proximity to our assets and our hands-on active asset management approach will potentially yield some internal and external asset management opportunities for the business. In addition to that, we've embarked on a very aggressive PV solar strategy across our portfolio. We're currently generating across 426,000 square meters of gross lettable area, about 25 to 26% of our total energy demand we're generating from our core portfolio. So we will be spending around 15 to 20 million rand of additional capex to fund the PV solar rollout across this new portfolio, which should also take us to close to 10 megawatts of PV solar capacity within the Spear solar portfolio. So there's economies of scale both on a service provider level, security contracts, cleaning contracts, other management opportunity sets that we see that we can unlock to create additional value. The counterparty's done an excellent job with a high quality portfolio, which is why we thought it would be a great fit for Spear, so compliments to them and their team. And I think that over the course of time, just given the proximity of these assets to existing Spear assets, there's also a lot of kind of day-to-day operational overlay efficiencies that we can create from this portfolio.
Well, I mean, there's this purchase consideration and also the additional capex in terms of PV solar installations that you're talking about. What is the source of this funding, cash versus debt?
Yeah, so we effectively use a mixture of cash and bank funding to fund transactions of this nature. But also we have no issue with recycling capital. So we've traded out of some assets. So we have some cash reserves available. We also did a very successful private placement before the end of February. We raised 313.5 million rand of new equity for our business. And then, having a close on 30% loan to value, the banks were very keen to fund this transaction on very favorable terms. So we'll probably fund this transaction on a 50% debt, 50% cash basis.
Quintin, in terms of the growth momentum, do you think that the current market conditions that the property industry is faced with maybe requires growth momentum to be skewed more towards inorganic growth at this point?
Yeah, I think there's it all depends on your own strategy. If you're sitting on development opportunities that you can achieve a commensurate return on, then you can be the holder of your own canoe stick, if I can call it that. But the inorganic opportunities from an acquisition perspective, especially from a Spear perspective, being a value investor, does allow us to acquire assets at a far lower value than what it would cost us to develop these assets. And I think therein for us lies the opportunity, especially from an asset management perspective. Because we're so close to these assets, we can really, drive rental growth, drive higher occupancies, drive reduction in operating costs, because operating costs really have also been a bit of a millstone around the REIT sector's neck. Given the fact that we are in a high interest rate environment, operating costs have gone in the wrong direction, and this just gives us, a lot to work with versus the risk, because development in and of itself is quite risky, given the fact that you do have a period of time where you're not earning any income on the assets that you're looking to develop organically within your portfolio.
All right. So you and Emira have agreed, but what kind of approvals now are needed from here on out, and what are the timelines that we're looking at?
So from here on in, we have this for Spear, it's more than 30% of our market cap.
Yeah.
So we'll be seeking shareholder approvals. That's probably set for around the 8th or 9th of July. And we are reliant on the Competition Commission of South Africa to also approve the transaction. We anticipate all approvals to be granted, all things being equal, and don't anticipate any dissent in the ranks of shareholders. Because the deal is accretive and it adds great value and scale to the Spear portfolio. We anticipate implementation by around 1 December 2024, upon which we can then stabilize the assets into the Spear portfolio.
All right. Well, thank you so much for your time and for giving us insights on that deal between Spear Reit and Emira. That was the CEO of Spear Reit, Quintin Rossi.